I'm Jeanette Mulvey, the Content Director of CO by the U.S. Chamber of Commerce. Welcome back to CO's Roadmap for Rebuilding. This series is aimed at helping you recover and grow your business. Thank you so much for joining me today. Today, we are talking about planning your business's financial future. We will share tips for tracking the financial metrics that will help you plan for the future, and then we'll talk about building financial relationships that will help you prepare now for growing your business. As we go along, you can answer our poll questions and submit questions for the Q&A session later by entering them in the box on the right side of your screen. Before I get started, I want to thank our event sponsor, Oracle NetSuite, and our supporting sponsors, ADP, FedEx, MetLife, Square, and Staples Connect. We appreciate your partnership in this series. We'll start today's discussion with a conversation on tracking financial trends. Our first panel includes Tom Kelly, the Director of Analyst Relations for Oracle NetSuite. Hi, Tom.
Hey, Jeanette, how are you?
Good, thanks. And we're also joined by two small business owners, Adam Fazackerly, the COO and co-founder of Lango, and Iya Karade, the CEO and owner of the Athletic Arts Academy in Orange, New Jersey. Welcome, Iya and Adam.
Good afternoon.
Hi, everyone. Tom, I'm going to start with you. Let's talk about what the biggest problems your small business customers are hoping to solve by tracking their financials, and if there are any blind spots you see in terms of things that they're misconceptions about financial metrics.
Obviously in this day and age, I think cash flow is the biggest thing. But just talking about measurements and metrics in general, I mean, most companies, you can account for things on a cash basis, which basically means as you receive a dollar, you recognize that, or an accrual basis where if you invoice a customer, you recognize a revenue. And there's a little bit of differentiation that goes along with how you're running your business and how you're going to, interpret the information that comes off of that. But at the end of the day, when we talk about cash and cash management and cash flow, that's key. As far as blind spots are concerned, what I usually tell most customers and most companies, particularly when you're trying to set up a group of metrics, because it's always a good thing to get a balanced perspective on your organization. It's really important to understand that you know what's driving the metric. And probably a good example I would use is there's a situation where you can have a metric, but it's this divided by this multiplied by something else, and it's really not intuitive to the individual. Basically, your employees that need to make the decisions on what's the right lever to pull and when to pull it. And so one example I use is kind of the correlation of insurance premiums for larger companies. Sometimes they would just, if you have $1 million and you have 10 locations, you divide it by 10, you send it out, and each organization has to deal with that. The reality is when you dug into what drove the increase in premiums, it came down to what's called days work lost. So if you have an employee that got injured on the job, the sooner you can get that employee back to the company, not necessarily operating at their full expectation of their job, but participating in whatever is going on day in and day out, you would lower the premium significantly. So from a measurement standpoint, it's really important to understand what drives the measurement, and then that should really be the type of thing that's going to drive the right type of behavior for the individual. Because let's be honest, we've gone through school, we've gone through kindergarten. I personally would get the frowny faces because I didn't share my toys in the sandbox. And then we go on to other schools, et cetera. But you get this constant feedback. And then it seems when you get into business, it's almost like the feedback stops and you're expected to know what to do, when to do it, and how to do it. So it's really important, I think, to make sure you're staying on top of what the important metrics are for your organization.
Well, let's talk about that, because business owners are super busy. And even though their financials are very important, they often are the thing that they don't have time to pay a lot of attention to, especially the more complicated things. So can you talk a little bit about automating that process and what kinds of financial data could be better automated that businesses maybe aren't doing?
Sure. So, a couple things. Number one, in this day and age, the ability for technology to automate many of the aspects of metrics, financial information, is really increasing speed and momentum. But there's probably two things that I would say from an automation standpoint. And number one is, and it goes back to my comment about intuitive metrics. If you're going to quote unquote collect information, you got to be careful about that. What comes best, I think, in terms of the metrics is what falls out of your normal financial and or accounting process. So if organizations or individuals don't have time to do the accounting, there's plenty of people out there. We're all working from our homes now that can do simple bookkeeping for you. As an accountant or a financial person, they consider it simple. Obviously, the business owner may not, because you've got 100 other things you have to do. But I'll give you one example in terms of our product, NetSuite, what it can automate. And it goes back to the cash commentary I was making before, where, in this day and age, most of us can log into our bank website and see our banking information, and then we can log into our accounting system, and then we got to play the role of bringing information in and entering it and trying to reconcile it. Well, the technology we have in NetSuite, it allows you to connect to your bank, bring the information in, and then based on parameters you've set up, it can automatically reconcile your bank statement. So think about that. If you're a larger company, it's what's called a cash desk. Am I long in cash? Am I short in cash? But if it's for the individual or small business owner, think about it as a digital checkbook. But that digital checkbook is on a real-time basis, let's say for the 24-month period. So you constantly can have this information available. And the whole aspect of bringing the information in, matching up to your activity from an accounting standpoint, and then providing you to say, hey, here's my cash position today. You can get that real time. And then taking it a step further, you could have it on something just went off here, an alert. You could have it on your smartphone or whatever type of device you have, or whether it's a computer. So it's really the beginnings of automating many things. I use that as one example, is really picking up significant momentum from a technological standpoint.
Yeah. You talk about cash flow. What other kinds of metrics should businesses be paying attention to in terms of financial metrics?
And so, I wouldn't complicate it, but obviously, you have an income statement and a balance sheet. So, cash is probably one of the most important things on your balance sheet. Maybe inventory, understanding what your inventory balances are, because if customers want your product, you don't want to be in the situation where you're going to have, the product's not going to be available. You'll miss a sale. On the income statement side, I would say don't complicate it. It's the best things. It's, keep it simple. And so whether it's cash, whether it's the revenue numbers and understanding, what that revenue is made up of, if you're selling various numbers of products and or services, which products and services are doing well, which aren't. Going further down, looking at your gross profit, which is basically going to be the revenue you get from these products and services, less the cost to produce them or deliver them, having a perspective on that. Because at the end of the day, you may have a product that's selling great, but when you look at the profitability on that product, if it's negative, probably is not a good thing to keep trying to sell that product, or maybe look at what you can do to make that product profitable, or perhaps switch to a different product or service. So Those are some of the key things. If you want to get a little bit more complicated, a metric that I think is good for some organizations to look at is profitability by employee. And that can kind of give you an idea of whether that's starting to grow, and you can look at your organization and maybe there's a certain trigger that you need to go hire additional headcount to take on the additional and support the additional business. So things like that. But ultimately, I think it's important to keep it simple, and most importantly, to make sure you understand that whatever metrics you're choosing, you understand the cause and effect of what those metrics and those results imply.
Great. Thank you so much. So you stay there, Tom. I'm going to go to our small business owners, and we'll come back to you during the audience Q&A. So Ia, welcome. You own a gymnastics and childcare center in New Jersey, and you've had to adapt during the pandemic. You just heard Tom talk about the kinds of financial metrics that businesses are following. Tell me, for your business during the last year, what are the metrics that you've been paying closest attention to for your finances?
Well, definitely cash flow. We pretty much started at zero and had to rebuild again. So our income versus our expenses, we immediately started to reduce our expenses because we knew we were going to be taking on additional expenses that weren't accounted for earlier. And those were our PPE expenses. We have never had to purchase so much bleach and hand sanitizer in the whole time we've been open. So a lot of things that we were tracking earlier shifted. And so we had to rethink how we were going to be expending the small revenue that we were beginning to generate and how we were going to affect our customer confidence. That's important, and in consideration after the pandemic. So our income versus what our new expenses were going to be, and how we were going to take some of the new programs that we had to implement, and how those things were going to project forward. What things we were going to continue to do after the pandemic, and what things we were going to discontinue.
Great. That's so helpful. Thank you. I'll be back to you in a second. Adam, welcome. So Adam, you and, hold on, I want to make sure I see Adam. Adam, you and your wife developed Lay and Go. Do we have Adam? I don't see him. I just want to make sure he's here. Okay. You guys developed Lay and Go, which is a portable organizational system. It lets you put products in a pouch and close it up and take it with you. And I know you built that out of your family's own need to solve your Lego organization problem, which I think a lot of us can relate to. Tell us, based on what you heard Tom say, tell us a little bit about the kinds of finances you're tracking. Very different for your company because you're selling a product and you're selling it both online and at retail. So can you talk a little bit about that?
Sure. So, I mean, we always try to, in things like this, talk about how small businesses can grow from zero. So we try not to use big words, but there are things that are core to our business. Understanding your P&L report, all of those parts of it, the cost of goods sold, how much does it actually take to manufacture that and put it on the shelves? Obviously, some businesses were extremely hit hard by the pandemic. We had interruptions on warehousing. We had interruptions on port closures. Those were really, really important during our fourth quarter delivery of product. And there were the cash flow items that Tom talked about. But I think that aside from that, when you establish your financial goals, you also have to look at your core values. How are you going to fund and grow your company? Amy and I have managed to grow Lay and Go and keep it a woman-owned small business that is 100% owned by the two of us. And so by building a product that had a demand signal and that we could grow responsibly, always stick to quality, we enjoyed growing our company that way. So we might have looked at our financials a little bit different than other companies might have. I think that it's also important to understand that a holistic view of all of these words that you're going to hear today is earned over time. And it certainly shouldn't discourage people from taking that jump if they have a great idea. But it's going to be something that yesterday I did not know as much as I did today. And then also be ready for the unexpected. We went from a product, if we manufactured a product for $10 and it came in before the tariffs were levied, that product was taxed at 17%, and overnight it went up to 42%. So, a jump from $11.70 to $14.20 is a substantial hit to a supply chain. So you have to be able to not only understand your numbers, but also understand how you can adjust when the unexpected happens.
That's great. Thank you. Tom, I'm going to come back to you. I think one of the challenges that everyone has with data, and it doesn't even matter what kind of data we're talking about, but in this case, financial data, even when you have the data, it's difficult for companies to figure out how to apply it. So, Tom, what kind of advice do you have for businesses, like on how to staff and manage the data to make sure that it's being implemented, that there are outcomes being implemented?
Well, I guess I would say, building off of what Adam just said, where you have a product and all of a sudden the tax rate goes from one level to the next, and being able to interpret what's going on. I think most people, whether if you don't have any financial or accounting acumen, you can find somebody who, let's say on the transaction side, can make sure you're recording everything and everything's in your system so the information you're getting is complete. And then you can also probably have somebody who can educate you on what does this information really mean. So really, I think what it comes down to is being able to clearly interpret what the information is. So whether that's total revenue of X, amount of dollars, what makes that revenue up, products, services, et cetera. And as then Adam would get into, what is that costing you? In other words, to put on the shelf or deliver that service. I think those are important things, but I don't think it's a real mystery. But I do think, you have to understand where, you need help or you need support, and you should reach out for it. And frankly, in this day and age, whether you want to go hire a full-time person, depending upon your budget and your business, or you just need somebody to kind of help you for a week or a month, I think, either extremes exist out there today, and it's probably up to you and what you feel is most important. But once you really get that information, and then the methods by which you're recording it, week in, week out, month in, month out, you don't have to worry about, I don't understand what this information means, because you understand how that information is being put together, and how to interpret it based on the information you were given, by an individual or a full-time employee, if that's the case.
Right. Thank you. Yeah, same question for you. You're tracking data, but you're having to make decisions based on the data. So what processes do you have in place for getting that information and then reacting to it?
Well, as Tom said, basically screen for help. Reach out to your network and talk to all people who are in your financial circle. I consider myself the CEO, the butcher, the baker, and the candlestick maker. So when I needed a help understanding and keeping track of those bookkeeping systems, to kind of see where we're spending, where we could increase spending or decrease spending in our marketing aspects. So that was where we really needed our help, which was just keeping track of our income and expenses, having a professional give us some help with that. Also with our financial strategists, we are part of a few organizations that assist us with that. And when you have organizations, and Tom, I think really brought out something really key, which is that, and when you're starting out, and even when you're considered disadvantaged, the advantages that you can act upon is your network. Or this is free. This program right now is free. Get your notepad out. Go on the website. Go to different webinars. Reach out to SCORE and any kind of other aspects that might have seasoned executives that will sit across the Zoom camera with you and really drill down what your processes are and help you to understand so that you can move forward more aware of your business and how you can get your business to grow. And that has been a process for me. Naturally, as a woman business owner, we have a tendency not to want to reach out for help. And that can put us in a bad position. So I have learned that you have to reach out to other professionals. What I don't know, and you might even have some of your customers who are in the financial business that can sit down with you on a Saturday or something after class and talk to you and ask you some questions, even that makes you think about the tools that you need and how you need to understand the data that you see coming across. Because a lot of times, as Tom says, you want information to come to you in a simple format. And
right.
when you get when you're looking at your bank statement, you might feel bewildered about how you put all those pieces together to come up with a 3-year plan, a 5-year plan, or how you even go to a conference and make a pitch.
Right.
That's so important.
That's great advice. Thank you so much. Adam, I'm going to come to you. Before we go to Q&A, I'm going to come to you with the same question. How do you react? How do you make sure that you are not just collecting data and monitoring it, but how do you react to it?
Well, I think that Tom and Gia both covered some great ground, but specifically with our company, when I look at it two different ways, which are, financial numbers and P&L reports and things like that are great, but we look at numbers now with our channel relationships. We look at those hour by hour. The world has sped up. we now have metrics that we were never able to access. So if we run a campaign on our product on Amazon, or a Google ad, or a Facebook ad, or an Instagram post, we can immediately see metrics, and we can see either the failure or the success of that program. On the other side, we also look for things like programs that are out there, sort of what Ia was alluding to. But Amy, my wife and co-founder and chief executive officer for Lego, she's amazing. She was a member of 10,000 Small Businesses, which is a program out of Babson College. And some of the questions that we're getting that are being asked, such as how do you develop a 5-year plan? How do you understand how much cash flow you're going to need? They address those things. And so what I suggest to founders is that you may be a small business or a small nucleus of an idea, just kind of infancy, but think big as far as those programs that you can reach out to and get educated on. They will teach and educate you, and they'll do it with the best supporting tools that they can give you. Reaching out to your network is incredibly important, but also doing the legwork on finding out if you have a weakness, what programs are out there that will really make it a strength.
That's great. Thank you, Adam. We are going to go to the audience Q&A now, but first we are going to do a poll. So we're going to ask the audience, and the audience can vote. What is the most important financial trend you watch for your business? You can select your answer on the right side of your screen, and we can see here how the audience is voting. Cash flow, obviously, is a big one, and sales. Inventory. I'm curious about profit. Maybe that falls under other, but to Tom's point, it doesn't matter how much of something you're selling if you're not making a profit, right?
Yeah, one would think.
Yeah. All right, so we're going to go to the audience Q&A. I think I'm going to start with you, Tom. What is the best way to translate the data you track into a 5-year growth plan?
Well, I mean, the best way, I don't know if there's one tried and true way, but at the end of the day, what is your goal? And if it's a 5-year plan and you want to be able to present it as 15% growth across the board, you need to understand as you go through the financial statements, balance sheet, and income statement, what are the percentages? What are some of the drivers? It almost goes back to our conversation with metrics. So if you have a 5-year plan where you're starting at X and in 5 years you want to have a 15% growth on revenue, everything else below that revenue line is something that you're going to be able and have to forecast. And you're going to have to forecast it, realistically and intuitively, so that when you're going to a bank, or you're going to a group of investors to get funding, if that's the case, you better be able to, coherently and intuitively explain to them, if I'm going to grow 15% in years 1 and 2, I'm going to operate at a operating loss. And then in years 3, 4, and 5, that's where I'll make, considerable gains on a profitability basis. So, and there's obviously several line items in an income statement, and we don't have enough time to go through it. But generally, in essence, that's really what you have to do. And, hopefully you have the skills to do it. And if not, there is plenty of resources out there, whether it's even videos on YouTube to, the program that Adam mentioned and what we've been talking about here. There are other options that you can reach out to help you with it.
Sure. Thank you. Yeah, I'm going to come to you next because I think you can probably answer this question. So this person says, this year I've changed my business model dramatically and plan to make more changes. How do you best establish a baseline for new revenue streams? So how do you know what you want your revenue stream to be if you're changing your business, which I feel like you did sort of change your business too?
Well, I looked at what was inherently natural to my business, what was a natural progression for my business. I work with children, so I looked at all things children oriented and things that they could do. And after I identified some things that I was interested in, and this is important, it needs to be something that you're interested in. If you're selling it, you need to be able to sell it with passion. So once I identified those, I was able to, what items we wanted to move into or what services we wanted to offer. I was able to basically Google and look around and see who's doing it. I'm not inventing anything new here. I just need to know what everyone else is doing and what are some of their successes and failures. And then you can look at what does the money look like there? What can I expect to generate here? What have I been doing before? And how can I apply that to be successful? What's the likelihood that this new service is going to be something that is going to be profitable? And so this is where you get into your numbers. What's my capacity? What is it going to be a new investment for me in terms of material or product? Or is it something that I already have that I could just now extend to another use and still be able to be profitable because I'm not having to make a new purchase of equipment or anything like that. So
Right.
these are the things that you want to do. You just want to really try to research what you want to go into. Somebody else out there is probably doing it already. Don't, break a sweat over trying to create it out of thin air, and ask people who have done it well and ask people who have not done it well, because you can
Right.
learn from people who have really struggled with things as well, and ask them, what would you do differently? And then if that works for you, move forward.
That's such good advice. Thank you so much. Adam, I'm coming over to you. This person wants to know, how much cash should you have on hand when you're starting a brand new business?
Yeah, I grew up in a military family. My mom was a teacher, and so we always watched our money. So I was always educated how to be financially responsible, but also live a great life. And I kind of apply that to my business. So if you're worried about cash flow or cash reserves or how you're going to fund your growth from day one, you don't have enough. And it should be kind of guided by that pit in your stomach. What's the appetite that you have for risk? If you're a miserable person who founds a company because cash makes you crazy and you don't have enough of it, then I don't think you're doing something right. If you're a huge risk taker and you want to push out and you don't mind walking that high wire and you could potentially fall, failure is okay. That's fantastic because it gives you education. And as long as it's not fatal to the company, then that's okay. But in terms of where you start off, I think a lot of that has to do with prepare yourself, understand your numbers, understand your expenses, understand how you're going to responsibly grow. And if Ia mentioned something great, which is she doesn't, when she's passionate about something, she doesn't think of it as a job or having to sell. And we think of it the same way. We build products where we don't sell, we educate. We talk to buyers, we talk to consumers, and we say, look, if this can affect your life in a positive way, great. Then we hope that you will buy it, try it, it changes your life. And that funds some of those cash flow issues that some companies have. We are totally funded by the fact that more cash comes in than leaves, and we're able to build responsibly. But if we had issues over cash, it would eat me away, and I wouldn't enjoy the process as much. And cash flow needs are cyclical. When we run up on large Christmas and holiday orders, the demand for cash is immense because everything is delivering and the bills haven't been paid by the vendors. So you have to think beyond just how do you start it, but how are you going to fund it once you do reach that level of success and continue to build on it? So
Right.
it's really critical to think about. But when you start off, just make sure you have enough to enjoy the process. Because if you go into founding a company with your glass almost empty, you need to go into founding your company with your glass full, because there are
Right.
plenty of challenges that you're going to run into. And the key is to be able to, always be able to refill your glass and have that energy and passion to fuel your idea or your service or whatever you're building.
Right. That's super practical advice. So thank you. I love that. That is all we have time for in terms of Q&A right now. So I want to say thank you to Tom for joining us and sharing your experience. And Adam and Ia will be staying with us as we shift to our next discussion. So next, we will be talking about managing your company's finances, which of course is a huge part of running your business. And that's why it's so important to build solid relationships with your financial professionals throughout the process of owning a business. Joining us to discuss that and how to build that team is Stephanie Sims, the founder of Viability. Stephanie works with small business owners every day on building their financial plans, and she has lots of tips on how to do that. So welcome, Stephanie.
Hey, Jeanette. Thanks so much. It's great to be here.
Hi, it's good to see you again. So Stephanie, you advise entrepreneurs on all sorts of financial matters, from accountants to bankers. What are the most important components of a business owner's financial team?
So I'm going to use a sports analogy, and I'm not a sports person, but please bear with me. I think in your financial team, just like football teams have an offense and a defense, you need two distinct lineups on that financial team. You need the people who help you track and understand your numbers. And a lot of times those people are internal. And you also need the people who are going to help you find the resources to grow. And those people are important because they're going to use that financial data to make those decisions. So that, do you want me to tell you a little more about those teams?
Sure.
Okay. So that first team could include your accountant, your CPA, your bookkeeper, and anyone who tracks the metrics that we were talking about in the first half, like your director of sales and marketing, or maybe your operations manager. And their goal is not only to get you the data, but to help you make better decisions and forecast what will happen in the future. These people have to speak your language, and you want them to work with you to give you that data in a way that makes sense to you instead of overwhelming you. Now, the other team, the resource team, that's folks like bankers, investors, capital strategists, and maybe even like your personal financial planner. And what their job is to understand those numbers from your business so that they can make decisions or help you make decisions about the best resources that you can use to grow your business.
Now, if you're a brand new company and it's just you, which is the case for a lot of people, how do you go about building those relationships, probably with the second team that you mentioned, who are more the consultant type people? How does one, when they're just starting out, build those relationships?
So I think that's super important that you want to think about the skills you already have, and you want to think about kind of the holes that you're trying to fill as you're looking for a specialist or a consultant to come in and help you. And so I know some business owners are really excited about their sales and marketing, and they have tons of data and they're really focused on tracking that. And so they may not need help in getting that kind of data, but they might need help understanding their financial statements. And that means they may want to talk to somebody who is not just a bookkeeper, but who's interested in educating them about what those numbers actually mean.
So this year in particular, I hear a lot of small businesses needing financial help from people who they haven't had to rely on before. Like, for example, if people got a PPP loan, companies got PPP loans, maybe their normal accountant wasn't as prepared to help them with that as maybe someone else who was an expert. So can you talk about whether you're seeing companies having more, speaking of sports, like pinch hitters who are coming in to just help during these really unique times?
Yeah, or sticking with the football analogy, special teams, right?
Okay.
And I think that that's very important for people to understand. You don't always have to count on just one person or one type of expertise, financial expertise in your business, because the financial world is changing really rapidly, right? No one was prepared for what was really going to happen with PPP. And so you have some companies, whether they're accounting companies or consulting companies, that have specialized in deeply understanding PPP and what it means for solopreneurs versus what it means for larger businesses that have employees. And so if you're in a situation where you have questions and you're not feeling like you're getting an answer from your kind of existing team, I think it's okay to say to that team, hey guys, do you know anybody who might be a specialist in this? Because it feels like we need to figure this out. And of course, go out and look for those experts yourself as well. As Ia mentioned, maybe by talking to your network or by connecting with them on platforms through SCORE or other places.
Right. Thank you. We're going to bring Ia back now, actually. Ia, your business has gone through a lot of changes this year. So how have you applied advice like Stephanie's in terms of building business relationships? What other kinds of people have you had to bring into the mix to get help this year?
Oh, wow. Well, I think the first resource I went to immediately when the shutdown happened was my peers, my colleagues across the nation who were in exactly the same business as I. And we immediately went into discovery mode. What do we know about what's going on? How does this impact our business? Where are we going to get money from? How are we going to manage our customers? How are we going to keep them? Some people were exiting. If you're considering exiting, how are you going to exit? If you're going to stay in your property, how are you going to deal with your leases and your mortgages? So that was definitely something that you want to establish, is a relationship with peers in your industry. The other thing was definitely my payroll company. With the PPP, it was critical for me to have that employee data at my fingertips. And I was fortunate that, I didn't really see the value in them. And I probably, like everyone else, I complained every month about how much they charge me for payroll. It always seems like highway robbery. But when I needed them in a pinch, they were there and all my data was there, and they were constantly staying on top of what the new rules and requirements were so that I could have these things at my disposal, thus putting me in a position to get in a little bit earlier on the second round. The other thing was you have got to reach out to networks. Like for me, I was in the IFO, which is the Institute for Entrepreneurial Leadership, and they deal specifically with helping women of color. So I was assigned a financial strategist who is an executive, and her involvement at this point was to help me, to educate me, as we were talking about earlier, to educate me about my financials and how to look at them and apply them in a way that's going to help me to move forward. The
That's
other
great.
last thing I want to just share was my banking institution. If your bank is not picking up the phone and calling you and saying, hey, how's it going? What can I do to help you? Even though you don't have the biggest budget, you're not the big heavy hitter, you're not their Fortune 500, they need to be calling small businesses. They need to be saying, what can I do to help you? My bank actually held a networking session just like this, where I got to meet people like Adam, and we just got a chance to talk about what we're going through. And that starts to trigger what you think you need to do when you get back to your business. So those conversations are really important.
Thank you. Adam, same question for you. I mean, your business is very different. You're dealing with, a global supply chain. What kinds of people are the most important in these financial relationships for you, and how are you leveraging them, especially during this year?
Well, I think that with any relationship, whether it's financial, whether it's manufacturing, I think that we start with our team. That is the thing that will, if it breaks, we can't move on. So the first thing I made sure that was intact and that was really able to move forward with all the disruptions that we kind of experienced was that our team was on board. They were full force, hey, we're not geographically located together right now. We're dealing with a lot of family issues, but we know what we have to do to succeed and to continue to keep that cash flow going, to continue to do our job so that our vendor relationships are not interrupted. And then you have, so for us, that our team is so important to us to maintaining financial stability and maintaining the company going in the right direction. Then you have the extended team, the manufacturing factories. the warehouses, which were tremendously hit. And we understand that when prices are not stable, it's because the amount of PPP and the amount of, or PPE rather, the protection that they're having to give to the people who work in these warehouses to keep the doors open. So, the overall financial side of things, it's built on the structure of a company. But like for the PPP relief, I think a lot of people realize that their banking relationship may not be what they thought it was. When we reached out to our financial institution that we've done business with for 10 years, they were not able to offer anything regarding the PPP loans. So we were lucky enough to look to our network, and we were fortunate enough to create a relationship with a fantastic bank out of Alexandria, Virginia, whose main building was here before the Washington Monument. So it's cool that some of the opportunities that were or the difficulties that were presented us led to opportunities. But I think that some of the underserved communities, I still really think that we need to look at them as any way we can help to ensure that those businesses are reinforced and that they have the resources to continue to contribute.
Great. Thank you, Adam. Stephanie, coming back to you. We are and have been talking about how businesses are dealing with data for surviving, essentially, right now, adapting and surviving. But we do seem to be making some progress in this pandemic, and businesses are coming out the other side. So can you talk a little bit about different kinds of people or relationships you need to be having with an eye towards growing your business and taking your business to whatever is next once we're done just surviving?
I love that. And I think it is so important as we start to come out of this maybe panic or emergency mode to start to turn our eyes towards growth. And especially as you start to think about the resources you might need to grow your business, whether that's through a banking relationship like Adam and Ia were both talking about, or that might be something more related to angel investment or venture capital. I think the most important thing to start to think about is what you want out of your business. And I think Adam mentioned this in the first section. You've got to know what's right for you, because ultimately any of the resource partners that you're going to bring in need to be aligned with that mission. Because when push comes to shove, if you've got an investor or even a banking relationship that's not aligned with where you want to take your business, it's going to end up creating more friction and making it more challenging for you than being the support that it really should be at that point in your business growth.
Yeah, and it's an interesting connection back to what Tom was talking about, because as you build these relationships with an eye towards growth, you need to have data to provide to anyone that you're attempting to either take a loan or pitch for investments. Can you just speak about that, about the importance of the marriage between data and building those relationships? Because although the relationships are personal, I imagine that these people need to know a lot about your business.
Well, and that's where it's really interesting, because if you can talk about your vision, then a lot of times you're going to attract the people who are already going to be kind of interested on a personal level. But then you can start to communicate the data to them that's going to help them start to understand the business side and why it's an interesting opportunity. So, for example, if you're having a conversation, and I think Ia was talking about having the bank pick up the phone and call you. If you're trying to develop a relationship with a banker, you might pick up the phone and say, I'd like to come in and understand what you guys could do for me. And I want to tell you a little bit about my business, not at the point in time when you need a loan, but just to develop that relationship. And following that conversation, you could check in with that banker either quarterly or maybe monthly if you're closer to wanting to get that financing, and share some updates on what's happening in your business, right? Hey, we just ran to Adam's point, hey, we just ran an Amazon campaign and we discovered that we can cut our cost of customer acquisition by 10% by doing XYZ. That demonstrates to the banking partner that you have a clear handle on your business numbers, and it furthers the relationship because you're sharing something exciting about your business that actually makes you excited, right? So it's a way to marry the numbers with the vision and the excitement that you have for your business.
That's great. Let's stop there. We're going to go to the audience Q&A in a moment, but first I want to do another poll. So audience, on the right side of your screen, the question is, what financial service have you relied upon most heavily this year? And you can vote for that now, banker. So that's interesting, though not surprising. Which, is an interesting change, I think, this year over other years. I have to imagine that on a regular year, accountant probably would have been, and payroll company, I would have thought would have been much higher. I think this says a lot about PPP loans and the need for emergency financing right now. So this is interesting. And I see lawyer at the bottom of the list. So it's an interesting mix for, I think it speaks to what 2020 was all about. We are going to go to the audience Q&A now. So let's see what kind of questions we have over here. Let's see. I'm going to start with Ia. This person says, I'm planning a business expansion soon and could use advice around growth strategy. Who would be my first call? I know you've had to make some big changes this year.
Okay, my first call, I made many, so I think my first call was to my business strategist. That's where you should have been having the conversations that Stephanie spoke of about they're very aware of your business. They're been following along your progress. They know exactly where you are in your business operations timeline and what your goals are. And when you decide you want to expand, they can help you to say, okay, let's drill down what those aspects are and what you need to get done and when in order for this to be successful. You can look at it and then see, if it in fact something that you need to do. Now, one thing that Adam brought up early was about financial education. And he's very fortunate that he came from a background where financial education was his legacy. A lot of us may, like for me, I didn't know what an angel investor was 2 or 3 years ago. So now I'm trying to figure out, how do I position myself to be able to be in those forums? So what I want to say to you is that you have to start to open your network. And if it's not something you can afford to do because of where your business is, or maybe you're starting over, that you try to resource some volunteer help. There's so many retired executives who are yearning to pass on their wisdom. Your banker, again, remember, they're in that seat because they have so much knowledge about money. They know money. And so don't feel as though there's any question that is too small. Tell them also that, listen, but this is after you talk to the strategist, of course. You need to come in with that picture, as Stephanie said. You need to have some information that you can pass on that lets them know that you're not just kind of jumping into this willy-nilly. But have that conversation with your bank and say, listen, these are some things that I'm doing. So that way, if you do need to go for a loan, or you don't need to go for a loan, or who you're best suited to apply for, because everybody is not going to walk into a bank and put an application through and expect success. They might tell you, listen, I'm telling you straight up, this is not going to be something that's going to be successful for you, but here's some other types of financial institutions that you can look forward to that may be able to assist you if you need financing. So it's all about that conversation, that relationship, and having someone who can help you gel your ideas and your passion, and help you even to understand it, to roll around it, to sleep on it, come back, and then present it.
Great. Thank you. Adam, you worked as an angel investor before you owned this company. And so this person, I think this question is good for you. This person says, what's the most important component of a strong investment pitch? So you can answer that. I know that your company is fully owned by you, so you can answer that with your other hat.
Yeah. Well, I think you need to be talking to the right audience. So if you're talking to a tech investor and you're selling a product like ours, know that the audience may be able to lend some insight. They may be able to get really excited and decide to jump outside of their space, but really try to find the people that invest in your space. And that seems very obvious, but when you're trying to find money and grow your idea, sometimes you start to just look at money as just money. And if you really want to succeed, you have to find smart money. I would never, ever, ever take money from an investor unless it was smart money. And the power is yours. Ultimately, they want to make great investments. They want to see you succeed just as much as anyone else. So if you're taking investment from someone who has a background in what you do, can offer some of the wisdom that will prevent you from running into all of those brick walls that I've had to climb by being self-funded, we could have grown very differently. And so ultimately, you get to choose. It's not I need money, I can go to anyone who is an investor. It's find that right person. And in a simple way, that's really where I would start. There are also different types of investors. So if you're early stage, look for family offices that are families who look to deploy their capital in ways that may be a little bit different. Again, like we said in the beginning, and I think and Tom and Stephanie have all really covered this. Not every relationship is equal. And if you find the one that has the best fit, you will find the best team member. And especially when it comes to investors, find the one that when you do what you just talked about, which is I'm looking to grow my business, I'm looking to diversify. When you do that, make sure you have everyone who is going to get either a pat on the back for succeeding or a hard lesson from failure. Make sure to have them in the room and everyone's on the same page, offers their insight, offers their reservations behind taking a direction, and then reach out to the people who will actually support it through buying the product or service. But I think that in the big picture, find the right people. And that's been a common tone. And that is especially true when you bring on money. So bring on smart money, and sometimes a wild valuation with the wrong person is not as good as a reasonable valuation with a perfect team member.
That's really good advice. Thank you, Adam. Stephanie, I'm coming to you. This is sort of a practical question. How do you keep relationships strong and productive when you don't have regular touch points with these people all the time? I mean, you're busy running your business, they're busy serving lots of clients. Do you just have any advice on how to keep those relationships strong?
Yeah, so I think it's really interesting. It's where you get excited. And this goes to Adam's point about finding the right partners. Normally, if you have good news, you want to share it, right? And so if you get in the habit of maybe evaluating everything that happens in your business once a month, you're going to have some good news that you're going to want to share. You're probably going to have some things that didn't go as well or places you could use help. And one of the things I've seen be very successful is to create a little monthly update and to send it out to all the people who you would genuinely want to share that information with. This could include potential banking partners or current banking partners. It could include potential investors or current investors. And it could include other people who you might want to bring into the fold. Perhaps it's somebody that you interviewed to be the chief marketing officer of your company, and they decided that it wasn't the right time, or you maybe didn't have the funding to bring them on then. This can be a great way to establish a touch point and to continue to build that credibility with those outside resource partners, because you're continuing to keep them updated in a way that doesn't feel like salesy or like you're asking them for anything, because you're genuinely excited to share the update.
Right. Thank you. Adam, I'm coming back to you because somebody wants clarification. What is smart money?
I think smart money is anything that money from a source that has an understanding of your industry, whether they're former founders or whether there are people that have invested in other founders from your space. That you're getting wisdom. You're not only getting money, but you're getting wisdom so that as you continue to grow your company, they see similar patterns and trends. They understand margin challenges. They understand cash flow requirements. They understand how cost of goods sold, if you're a product, could be lowered by switching your manufacturing approach. So it's bringing on intelligent people who they want to see you do better than anyone because ultimately they're putting their money behind you. So instead of it just being money that you're left with in the bank to deploy in the ways that you see fit, you then have this level of understanding and support from the people that are giving it so that you make better and better decisions. The key is, though, that if you didn't give away too much, you still make the decisions and you should own those decisions. Investors are people and they don't always have the vision that you do as a founder. Ultimately, what makes me tick is by being a designer, by being a founder, by having 3 US utility patents and to be able to understand how to defend those things. There are some investors that are wildly successful financially, but maybe they don't have those key parts that we saw to build our business and what we had to bring on. So I love people that take on investment, but I see the most successful companies that use giving up a percentage of their company to smart investments and to smart money as being the ones that get the most value.
Great. Thank you, Adam. E, I'm coming back to you. I'm almost out of time, so I'm going to give you I need the 25, 30-second version.
Okay.
If you only had a small amount of money to invest in your business right now, would you invest it in marketing, in hiring, or in your facilities?
I would definitely put it towards hiring right now, because if you hire the right person who can manage your marketing strategy while you do other things, then it's a win. If they have some other capabilities that they could bring to the table, it's a win. You've got people all over the country that can work remotely now. What's happening is on social media. So as far as a service industry is concerned.
So it would be hiring to do marketing. That's a pretty clever answer. That's all we have time for today. So thank you, Ia. Thank you, Adam.
Thank you.
Thank you, Stephanie.
Hi, Evan.
You bet.
Adam, thank you.
Thank you all to our audience. So I wanted to thank our event partner, Oracle NetSuite, and our supporting sponsors, ADP, FedEx, MetLife, Square, and Staples Connect, for helping bring the program to you today. Please join us for our next series in this event, which will be Thursday, March 25th at 12 p.m. Eastern Time. That will be our roadmap for rebuilding, managing your team, just like what Ia was just talking about now. And that will focus on providing you with tips and ideas in how you can lead your team during this challenging time and through to growing your business. In the meantime, check out where we have resources specially curated for you on this topic. And you can see those on the bottom of your screen, and they'll be coming to you in your inbox as well. And please let us know how we did today by taking our audience survey on the right-hand side of your screen. Thank you so much for joining, and we'll see you next time. Together, we'll recover and rebuild. We'll see you on March 25th. Thanks. Bye-bye, everyone.